In fact, for most of the time, consumption and investment are quiet and even opposed to each other. In July 2004, Yao Jinyuan, then chief economist and spokesperson of the National Bureau of Statistics, spoke at the high-level forum on China's economic development trends and macroeconomic regulation. He addressed a concern: while the investment rate in GDP was rising, the consumption rate was declining. This trend, dubbed asymmetry between consumption and investment by media, was seen as key for future macroeconomic regulation. Jinyuan believed it was necessary to specify the issue, making people aware that if consumption couldn't grow fast enough to absorb new industrial growth, the economy faced dramatic fluctuations. For example, on May 22, 2007, the Beijing News published a concerned editorial. At that time, the global economy was slowing down, and there was a nationwide debate about the three engines of growth, reflecting on whether investment, exports, and consumption should be reprioritized. Hunan province led by including consumer demand expansion as a hard indicator in performance assessments, requiring all government levels to tackle challenges in boosting consumption. However, author Yang Xiaofu expressed strong unease. He believed that while this restored consumers to their essential role as ultimate investors and resource sources in the macroeconomic cycle, stimulating consumption should be a long-term, sustainable endeavor, constantly monitoring public consumption structure for reasonableness. Repeated farces occurred in regions where reliance on investment artificially boosted data, potentially distorting policy's original intent. In the title, he highlights both the benefits and drawbacks of expanding consumption. Excessive reliance on investment has given rise to odd phenomena. Policies provide monopolistic markets for investing enterprises. By 2009, the debate over whether to prioritize investment or consumption echoed throughout academia, turning into a public policy question. Economists such as Xiaolei and Wang Dongjing argued that it would be best not to rely on investment to sustain growth. Scholars like Lu Fuyuan, Su Xiangqian, and Mundell called for directly stimulating household consumption through tangible means such as shopping vouchers. On the other hand, represented by Gong Fanxiong and Fu Yonghao, the opposing side believed that directly handing out money could actually lead to a contraction in consumption. In February of that year, Economic Information Daily compiled and reviewed these opinions, concluding that rationally structured consumption should not only be the primary driving force for current economic growth, but also the ultimate goal of our economic development. It can be said that, in the face of a tidal wave of economic transformation, consumption and investment effectively served as a reference answer, earning their entry ticket to the Chinese market. As a result, for more than 20 years since then, continually answering why things are the way they are now and what changes we need has almost become an instinct running in the veins of Chinese consumers and investors. Lao Song is well known in venture capital for his straightforwardness. For example, when the Ruixin financial fraud scandal broke in early 2020, Lao Song wrote a sharply article, accusing Ruixin of recklessly abusing Chinese credit. Such behavior was a betrayal of the culture of hard work and prosperity built by generations. During the Shanghai pandemic, Jiahua Capital donated supplies worth 8.14 million yuan to Shanghai. Lao Song wrote 9 diary to express his concerns and make appeals. He held live streams with economists Guan Xingyu and Xiang Songxiangqian, sharing his macroeconomy insights and thoughts on China-US relations. He's passionate about public issues. Though unsure if his words bring change, he persists in being heard. In the consumption versus technology debate, he repeatedly argued they shouldn't oppose each other. Consumption provides vast application scenarios for technology, creates jobs and tax revenue, and offers long-term financial support for tech development. Without consumption scenarios and applications, technology cannot be integrated into society. In recent years, there has been a saying in the investment community that an outstanding investor must dare to speak out and be willing to take a stand. Lao Song fits this definition very well, but he rarely takes a stand solely for the sake of his own projects or investment directions. In Lao Song's view of investment, investors should realize that what they are engaged in is economic work, a job that often involves participating in industrial upgrading and structural adjustment. Under this premise, social responsibility naturally becomes an inherent part of the investor's profession. There is a responsibility to step outside the preset framework of the invested projects, requiring in-depth research and reflection on the macroeconomy. Even the well-known reputation of Xiangqian Capital as an established consumer investment institution actually stems from their own proactive choices. Over the years, we've focused on high-quality, essential, livelihood-related mass consumer goods. This is because we recognize our own capability limits, and we understand consumption serves as infrastructure, empowering others for the greater good. However, as a massive single market, China has demonstrated significant late-mover advantages in recent years. Investors have enjoyed a brief opportunity to bypass certain technological paths and have reaped substantial returns from the era's beta. Lao Song believes that the existence of these two objective conditions has created a trap. Many people have profited from the era's beta, yet they mistakenly believe that it was their own alpha at work, confusing it for their own abilities. He believes that BYD is a very typical example. It took BYD more than a decade before it finally found its opportunity in the major track of new energy vehicles. It was only after accumulating experience in technology, talent, market, and manufacturing capabilities for over 10 years that BYD achieved today's advantageous profits. This is the result of a collective effort and cannot be simply attributed to any single investment institution or entrepreneur. That's why you see so many institutions now hiring chief economists. Lao Song hopes that a qualified investment institution should understand Kondratiev waves, and not just go with the flow. The Kondratiev wave was proposed by Soviet economist Kondratiev, who suggested that there are cyclical patterns of boom and bust in economic development, divided into 4 stages: prosperity, recession, depression, and recovery. Prosperity begins with innovative technological change, leading to rapid economic growth. However, before the next major innovation ushers in recovery, the economy inevitably goes through a depression period where growth momentum is lacking. Specifically for Xiangqian Capital, Lao Song is fully mentally prepared for the challenges ahead, ready to hone his craft for 10 years, and determined to persist even for 30 years if necessary. Of course, this may also be something inherent to consumer investment itself. Because in classical economic theory, consumption not only meets immediate needs, thus enabling the reproduction of labor and producing instant effects, but also has lagging or delayed effects. Only when accumulated to a certain extent will it have the anticipated impact on an individual's life opportunities and the current state of society.